Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at the VS or volume spike sell setup in conjunction with our multi-time frame analysis. But today, look at an example from one of the Indian markets, the Nifty. But before we start that, I want to go through our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept, that losses can and will and do unfold. This is very important. We'll be looking at a losing trade in today's video as well. Right, let's now have a look and see how the Nifty is unfolding today, which is February the 28th. Now remember, MTPredictor is not a black box system. We don't just follow our automatic setups blindly with our MTP trend. We don't do this because markets go in cycles. This is what we teach, is that half the time the markets are random, so you shouldn't be doing any analysis at all, but the other half of the time the markets come into a clearer pattern, and that's when you can be doing some analysis and look for trade setups. And that's what I want to look at today. So how do we do that? Well, we go to the higher time frame chart. The higher time frame chart is a time frame between 3 and 5 time frames higher. So if you're looking at a 3-minute chart like we have here on the Nifty, the higher time frame would be the next logical time frame up, which would be the 15-minute. If you're, say, looking at 15-minute Forex, the logical time frame up would be the hourly. If you're looking at daily charts, then it would be the weekly. So here we look for DP support and resistance zones. So I want to go back to this previous low here. In fact, actually, I'll just use our training mode and I'll jump back to here. Remember, we're not using our MTP trend color on this higher time frame chart. We're not really looking at our setups on the higher time frame chart. We're just looking at our DP support and resistance zones. So here you'd go back to the last pivot low, which was here. You'd right mouse click, do decision point. Now can you see how that's on the chart there in advance? So that will give you an area of potential support, but more importantly, before the market even gets there. If I turn training mode off, can you see what happened throughout the rest of today? The market went down, made a low at that level before rallying up. So how do we make use of this on the shorter time frame, which is the time frame we're actually trading on? Well, if I go down to the 3-minute chart, can we see how the market came down? It then hit this 15-minute support zone, which is actually now the low of the day for you. But more importantly, it gave us a VS or volume spike buy setup here. So in other words, this VS buy setup here was falling in with our higher time frame analysis. In other words, it was unfolding at our 15-minute support zone. So we right mouse click over the blue buy bar, place our analysis on. This would have given us a long trade. As you can see, the market has now reach the first target, where potential profit of 3R or 3 times the initial risk is available. So this is what we talk about when we talk about multi-time frame analysis, and we're looking to take trade setups that fall in the direction of the large degree trend. If you were following just our MTP indicator, it was a red indicator here, so you'd have been taking sell setups, not our buy setups here. There was a history triangle here, can you all see that? This allows you to place analysis on that bar, and as you can see, that would have been a trade at the time. This would have been entered short and then stopped out, so this would have been a losing trade. Remember, we use position sizing to vary the number of lots, contracts or shares to keep your initial risk small and under control. In this case, less than 2% of your account. Your account, you can change that in our settings as well. So, but the more important thing is this would have been a losing trade, but it had been a 1R or 1 risk unit loss. If I clear everything off, there was another TS3 sell there. If I place the analysis on, that again would have got you short. The market didn't quite reach its projected profit target, but obviously as the market got into the higher time frame support here, and then you got a setup in the opposite direction, you should have been stopping and reversing there. So this would have been a potential 4.9, can I call that 5? Almost 5R profit, which obviously was a lot more than the previous 1R loss. So that would have been a good trade on the way down there as well. But the clearer trade, and as you can see it here, was when it came into this 15-minute support. So what is a VS trade setup? A VS trade setup is where the market makes a wide range bar. Can you see it on this way, this bar here, a wide range bar that goes beyond and a psychological important level. So in other words, went below this low here on high volume. Normally this would be an indication of selling, but because we came into our DP support zone and the market reversed, the high volume in this previous bar, which was here, was not actually selling, it was buying. More importantly, it was buying by professionals. So in other words, this was a fake out. So amateur traders would have probably been getting short here as the market broke to new lows, but the reversal at our DP support zone, particularly at our higher time frame DP support zone, generated a volume spike, sell setup in the opposite direction to then allow you to get long, to then ride the coattails of the professional traders as it went up into the first target there for a nice 3-hour profit. So that was a good example of our volume spike setup, but more importantly, how it came in at higher time frame support. If we go back to our 15-minute chart there, not only was this at 15-minute DP support, but if I right mouse click over the low, do an Elliott wave intermediate, this was also the end of a 5-wave sequence. 1, 2, 3, 4, 5, with the low at the minimum wave 5 WPT. Our normal indications are that after a completed 5-wave sequence, the market tends to go back to the DP from the prior wave 4, which would have been here. Again, right mouse click DP, that would have been on your chart in advance, so that will give you an indication of a potential resistance zone, again on your higher time frame. So that fits in nicely with your shorter time frame analysis, because that was your higher time frame resistance there as well. So your trade here would have been up into that higher time frame resistance. Because our MTP trend is strong here, you see it's gone beyond our strength band. If you wanted to, you could then trail with our ATR stop and see if the market is going to go higher, because the market's still open at the moment and still trading. So you could start to trail with our ATR stop, which is our blue dots here, to see if this is going to go a bit further. So we can probably follow this and see whether the market's going to run a bit further as well. If you are, then that will allow you to capture that trade as it runs a bit further. So hopefully this has been a good example of not only our VS setup in MTPredictor, but also using multi-time frame analysis, in particular how we waited till the market came into higher time frame support to look to see whether there was a shorter time frame trade setup at the time, and then look to take that trade on the shorter time frame. So this is what we do with MTPredictor. It's not a black box system where we look to take all the trades 100% of the time. We look to see when the pattern becomes clear, and more importantly clear on the higher time frame, then look for trade setups that fit in with that higher time frame analysis. And this has been a great example, and as you can see, it allowed you to nail the VS setup came in on the very bar of the low of the day so far on the 3-minute Nifty. Today is February the 28th. So a good example of things coming in there to nail a long trade as the market has been rallying quite nicely up off that low.